Thanks for watching, guys. This is James from WorkSpace, and we are going to break down 6 different properties in the Pearland market. These are retail spaces, and this is for a franchise. So we're going to break down the numbers. We're going to look at how to evaluate these deals based on this analysis. And I'm looking forward to having further conversations after you guys take a look at the video. Okay, so to start off with how to read this actual report, this is a summary screen. This is something I can see on my end. The format for the information you're going to get may be slightly different. The colors that correspond with the names of the properties are the same. And of course, the numbers are going to be the same. So we're going to stick to the data points that are the most valuable for a tenant or a business owner. And we're going to explain that. We're going to explain my assessment of the proposals and where they stand now, and then we'll just take next steps from there. So first off, we're going to look at total cash flow. This is the most significant number, I would argue, for most business owners, simply because it shows how much cash I'm going to outlay over a set period of time. So when we look at Kirby Commons, we're going to outlay $596,000 approximately over 7 years. For Kingsley Shops, you're going to put out $525,000 approximately over 5 years. For Kirby at South Fork, you're going to put out $497,000 over 5 years. For Ridge Rock Option 1, $365,000. For Broadway New Shopping Center, $395,000. And Ridge Rock Option 2, $417,000. Now, you can look here. All of these spaces are roughly the same square footage. Kirby Commons is 2,250. Kingsley Shops is 2,500 square feet. Kirby at South Fork is 2,500. Now, Ridge Rock Option 1 is 2,000 square feet. The Broadway Shopping Center is 2,075 square feet. And Ridge Rock Option 2 is 2,440 square feet. It's kind of interesting because one of your second largest space is the cheapest right now as the numbers weigh out. Okay, so let's see here. We looked at total cash flow. Now, the reason I'm not going to spend too much time on total cash flow is that Kirby Commons has a 7-year deal. Everything else is 5 here. Now, you see 63 months, which is 3 months free rent that's plugged into some of these, but it's 5 years worth of payments. So you can't really compare apples to apples when we look at a 7-year deal versus a 5-year because, we're paying 2 more years at Kirby Commons. But how you can compare apples to apples is when you look at the effective rent. Now, this takes into account free rent. It takes into account lease term. It takes into account the cost for build out, okay? This is all of those numbers that matter. And we get basically an average rent that shows the true value of a deal. So when we look at the proposal for the effective rent, we can see here that the dollars per square foot for an average is $3.15. Compare that to Kingsley, which is at $3.55. Compare that to Kirby at South Fork, which is at $3.35. These are all fairly close. And that's significant because we haven't negotiated these yet at all. So this is just stock. This has been negotiated. These are they haven't heard from us yet on what we want. This is where things get interesting. At Ridge Rock, we're at $278. That's a very, very significant difference in your net effective rent. This is a much greater value, is what we're getting, and you can tell that because of the free rent that's been given already, and the tenant improvements are pretty much what we can see. I think they're actually the same amount as what they're offering at this point, but that's starting out. This is before we negotiate. For Broadway New Shopping Center, we're at $3.03, so both of these are already lower or better value than Kirby Commons. And this is huge with Ridge Rock Option 2 at an effective rent of $2.69. That's a very, very significant value here. And obviously, the landlord's the most motivated to get this deal done, and we know that from the meeting with this landlord. But they're offering 3 months of free rent here. We'll probably get 4 or 5, is what I'm estimating. We probably can get a reduction in rental rate as well, though I would argue that I would push more for more concessions instead of rent reductions here. I want more free rent, I want more build out, and I'll explain why in a minute. But when we look at the true value of the effective rent, we can see here that Ridge Rock Option 2 is running away with it with 2,440 square feet, and you're paying $100,000 less approximately than some of these other properties. That's very, very significant. So, especially if you compare Kingsley Shops versus Ridge Rock Option 2, that's a $100,000 difference. And these are both 5-year terms. And that just goes to show you the delta in some of these deals. Okay, so I think these are significant numbers. I think that because of the difference is so great, some of these we might be able to knock out from jump and narrow down to 2 or 3 options. Okay, here's another chart that just shows the effective rent. Okay, so this shows where they all stack up. And you can see Ridge Rock Option 2 is going to be the greatest value, followed by Ridge Rock Option 1. Then you have your Broadway Shopping Center, and these are all Jack's properties here. Okay, then it goes up to, who's next here? Then you have Kirby Commons. Then you have Kirby at South Fork, and last but not least, the Kingsley Shops. Now, one thing that's different about these 3 properties here and these 3 properties here is that you'll see the property values here are going to be higher. For one, the triple nets are going to be higher as well, and they generally offer less in the way of concessions. We're always going to get a worse deal at properties like this. The question that's going to matter, and we talked about this last week, is how much value are you going to put on being in the primest of the prime spaces in Pearland as a gym. If you have to do this, and it's essential to be in a Class A draw retail next to a big box, where most of these are, you're going to pay a premium for that. Now, you don't have to pay as high of a premium as right now they're currently set up. We're going to get some movement on these. I would imagine these will get more competitive than Kirby Commons by the time we're done. They have to be considered. End of story. With the ones below, this is where things get interesting, because when we look at Ridge Rock Option 2, that's in a very nice corner that has a lot of visibility next to some great rooftops. So it's almost a mix between a Class A retail, which is going to be, and a neighborhood center where a lot of the local rooftops are going to have direct access to this location. Now, for most gyms, you can have a thriving business in a spot like that. Talk to your franchise owner and see if they concur with this. But the demographics speak to and support this type of business there. They're going to do very well as far as that location. In Pearland, the whole market is a very strong market with the type of users that you want. So my argument would be, do I want to spend $100,000 more over the course of 5 years to be a few blocks away? If so, we should put more attention and energy into these and use these to leverage them. If I don't have to spend an extra $100,000, or if I can leverage that $100,000 in marketing and to get better equipment, to hire additional sales employees maybe, could I use that to get further gains and still be in that same market? If the answer is yes, then we use these to leverage to get a better deal here. Now, Jack has already responded to ask kind of when we want to start talking, because he's ready to get a deal done. Personally, I'm interested in doing what you want to do, Tarek, and what's best here. Now, I want to throw in an X factor quickly. We haven't talked about term. Now, with Kirby Commons, we're at a 7-year deal, and the previous broker said we had to get 7 in order to get $35 a foot. Whether that's true or not, I can tell you that all of these are at 5. So if we were to even consider doing a 7 or 10-year deal at any one of these properties, this is what I estimate we could get. We can get an additional $5 to $10 in build out. So that brings you from $35 to $45. That makes a much nicer build out. We can get wood where you couldn't before. We can get extra trim. You can get nicer exposed ceilings. We can potentially add another bathroom. Instead of having one, you can have 2 showers. Very, very significant gains. Higher quality window treatments so that the space stays cooler. Stuff that you can get a fan unit for the gym. That's an industrial grade fan unit. So these are all things that could be afforded to us with that higher build out. We can get additional free rent, an additional 2 months. That equals about $7,000 to $12,000 in savings there again. So by just matching the same terms that we have with Kirby Commons, we can move the needle quite a bit here. And I do suggest that we consider those options. I think the landlord has to give you something worthwhile in order to do it. But I think that we should definitely see what the landlord would offer you in the way of a carrot in order to get you to make a longer commitment. Okay, so here's the present value of these properties here. Now, I don't really talk about PV that much. If your CPA wants to know about it, we can talk about these numbers. For most of my clients, they care about the cash flow, the effective rent, because those are numbers that are very fluid, that move with the negotiation. They're indicators of value. My favorite is effective rent because it stops the shell game. You can't hide stuff here. These numbers show you, let's say that if I got a really, really high, just ridiculously high rental rate, but then the landlord gave me 2 years of free rent, then that drops my effective rental rate. And it shows where the deal is. And by contrast, if I got 0 free rent, but I got a really, really good rental rate, the effective rental rate is going to show that. So it keeps things very simple, and it keeps the landlord from being able to mystify you with numbers and distract you. Not mystify, but I say distract, because I think it's more important for us to be able to cut through and see the real numbers and where they stand. And this is the best indicator, in my opinion, there. But here is present value if you want to see where they stand. Now, let's see, present value per head. I really don't talk about that unless we need to. Total cash flow, you can see that too. So to quickly hit on the market as we close this out, if we're looking at the Pearland market and you're asking me, hey, James, where do rents lie for these proposals compared to the market? And there are going to be 2 tiers that I break this down into. For Kirby Commons and those top tier Class A properties where you can't get much higher than they are as far as pricing goes, then I would say that the rental rate is generally going to be, this one shows you is at $37 a foot. That's going to be a high. They get maybe to about 38 to 39 is where I think that they could be on an average. I think that Kingsley Shops being at 42, this is definitely another one that's on a high here. Okay, so this is the higher end of the market. If we had to go based on a base rent, what you would typically see is $30 to $34 per square foot plus triple net is what the numbers would read out if you were looking at a flyer. If we're looking at the market average, when we look at the second tier of properties, this is an indicator of where a lot of these other properties are. They're going to be sub $30 a foot plus triple net. So when we look at Ridge Rock option 2, this is all in at $32.58. So that's your base rent plus triple net costs included. And so it's a significant difference. So I would say that as far as the market, we have a very good selection here in the marketplace on what's available. I think that these 3 properties on the higher end for sure, and these are very, very competitive. And I'd say that Ridge Rock option 2 is a loss leader in the market, meaning that this is something that I think would be, it's very, very competitive. It's not even listed yet on the systems. So if someone were to look up this property, you would not see it on a CoStar. It's something you would see if you're driving by, like you guys did, if you looked at the sign itself. But as far as listed electronically, it's not. So from a market perspective, I think we have an excellent cross-section. None of these, in my mind, are going to be outlandish where it's egregious. Nothing here is egregious. We have some things that are top of market, which is what we would expect. and we have some things that are competitive. So literally we go from top of the market to Kingsley all the way down to competitive from Ridge Rock. And what I'm really excited about here, Tarek, is that these properties are they're all in similar condition. The exposure to the market as far as traffic and whatnot is very close. So there's no significant differences from a operator standpoint, even though the pricing is different. But from a pure operator standpoint, from a traffic standpoint, Ridge Rock here has just as much opportunity, in my opinion, for a gym to be successful as some of these other locations, especially considering the fact that you can turn some of these savings taken from these properties, which could be $100,000 difference if we look at Ridge Rock option 2 versus Kingsley. I mean, you got $100,000 here that you can play with and put toward marketing, and you're not paying for build out. So it's kind of hard to beat that. So, but that's my opinion. If you guys think differently and we want to push the envelope on these here instead, let me know kind of where your head's at here. And we're going to, based on what you're telling me, we're going to fashion the most aggressive response that I think the market can bear. And that's when we're going to have some fun. I'm going to push the rental rates. I'm going to push free rent. I'm going to push build out. And we're going to talk about term, because the longer term gives me more to work with. They just have to make it worth your while. So I hope this information was helpful to you. I'm looking forward to your questions, and thank you for watching.